Why is understanding taxes such an important part of money management? Because it is. You want to keep more of what you make, number one, and most people just think it's an invisible pain and give it absolutely no time, and it's something that's going to happen to them. So then they're like, oh, poor me, I overpay taxes. I'm going to say it's a choice to overpay taxes. And I'm going to tell you throughout this video that your choice could be completely prescriptive and diagnosed. And like I knew in November of 2025 what my total 2025 tax burden is going to be. And it's really, really low. So over time, you get more and more strategic with this. So I want to talk about 3 things and how to help you really pay attention to your taxable year, when you should pay tax, and how it is a massive part of money management. You don't have to understand all of the taxes, because the folks that are actually on our tax teams, because this whole community of integrated wealth is not just me. It's myself, a bunch of experts, about 28 financial and business experts. I have a group of coaches. I mean, we have such world-class people who have become millionaires. They live and breathe this work. And taxes is a massive part of our conversation. I'm talking weekly, daily, because every move you make and when you make money has some taxable event or not. Depends how much strategy you have. So in Put More Cash in Your Pocket, I talk about how families can make an extra $500 to $1,000. When you make it, you want to make it inside of a company, not into your own checkbook. And when you do it in cash, it's not really helping, because you can't really take cash and go buy a piece of real estate. You could take cash and go buy some Bitcoin and then cycle it through. You could put it into an IRA. But how you manage your taxes and get prescriptive is critical. Our tax strategists go to school. Most of them have a bachelor's degree, a master's degree. That's a 5 to 6 year plan. Then they have to do 2 years of audit. So they have at least between 6 and 8 years of experience. That's similar to a surgeon. You don't do your own surgery, so don't do your own taxes. Let professionals who just do that every day, which is what our teams are going to do for you, is that's all they do. They don't even do the bookkeeping. They just do the tax strategy. They work with the bookkeeper to make sure your documents come in okay. So inside this video, we're going to talk about why taxes are one of the most controllable and prescriptive angles inside your money management plan. Number 2, what wealthy people know about the tax code that most of the world just ignores. And number 3, what are the most impactful tax strategies to business owners today? Given the big, beautiful bill of July 4th of 2025, it's remarkable. So let's begin. Tax is the most controllable part of your money management and wealth plan, and here's why. I'm going to read off a few statistics and things. The average middle class earner pays 30 to 40% of their income over a lifetime without any strategy. They'd either do their own on TurboTax, they take it down to H&R Block. There's absolutely no strategy, and you're doing what I call a CPA historian job, right? You're handing your big box, we call it your shoestring box of stuff, to somebody. They're sorting out the little bits of it without the real comprehensive story of what you make. How did you do any deductions? Did you do any deductions? And then you're just handed back a tax bill and you pay it. Like I have clients that have joined us, they owe $80,000, $100,000. They get so frustrated, they just stop paying taxes. So now you got to play catch up with all the fees and penalties of what you did owe in 22, 23, 24. We literally have tax teams doing all that back history. And so what we see and what we know is that we actually lean in and learn. So not only is the tax person smart, the business owner and wealth builder, the you, has to get smarter, meaning lean in and understand this content and take it to heart, have a plan around it. So inside of a company, a C Corp, an S Corp, an LLC or limited partnership, you activate the greatest tax code, almost 83,000 pages in the United States. When you do nothing but just have a job and just invest in the stock market, you now have 2 massive taxable events. You're making your money, highest tax and worst kind of money is W-2 money, and then you pour it all into the market where now you have a capital gains problem, more tax. So you actually need to straighten this all out, and let's talk about what the wealthy do. So what wealthy people do to really activate the tax code, first of all, we pay tax when it's appropriate for our company. Companies pay tax September 15th. Then you as the owner pay October 15th. So April 15th is irrelevant when it comes to tax planning in our community. We will move you, extend you. Very few people will actually qualify to pay in April. And the only reason you pay then is if you don't have a company to do the extension for. And you can do your own personal extension, but why? We want you to be corporately organized. So for that, in the show notes, I'm going to give you 2 tickets to our Millionaire Intensive. I want you there. It goes from 10 o'clock to 3 o'clock. We talk about corporate life, tax strategy, corporate structure. Then we talk about the businesses and how you can actually activate the officer and director benefits by having an operating company, not just a simpleton cash machine or quick service-based business. You've got to have more to activate the broader base of the tax code. So we are extremely strategic. We forecast forward, not just have the historian view where the CPA or your tax person or you come in at the end of the year and you just throw it through a little quick software and then you get your tax bill at the end, versus you're going to make 500,000, you're going to make $1 million. So then it's what we call forecast forward. I made up those words, so good luck finding it on the internet outside of my channel. So when I say forecast forward, who's going to pay for your phone? Like I personally, Loral Langemeier, don't have a phone, right? This phone is paid by one company. I have another phone is paid by another company. And then who pays for your technology? Who pays for your car? Who pays for your business trips? Who pays the kids? How does that all work? Because that is all deductible expenses where you personally don't get them. So you want to keep your payroll, right, your W-2 inside of the company as low as you can. That also affects your ability to get low healthcare coverage, meaning cost, not in coverage. I have supreme coverage at a really low cost because I only pay myself $42,000. That's all I do. The other thing that wealthy people do to really maximize the tax code is how we invest. So how we make our money in the company, how we activate those deductions, and how we invest in real estate, gas and oil, aviation, mineral rights, water rights, things that have a huge depreciation schedule against them. That affects your taxes too. So for example, instead of buying a REIT, which is a stock in the market that's just going to give you capital gains, you buy the real estate that has the depreciation. So if you want to learn about this more, I would really say just lean in, learn, binge my channel as much as you can. We actually have an opportunity for you to binge for 25 hours. I'm going to give you back a $750 credit towards new tuition so we can actually help you learn and understand more. Also, if you have any questions, go to askloral.com, ASKLORAL, ask a question, make a request. I need you here every day. So subscribe to my channel, click that notification button, be here, share this channel with people in your life so you can have an accurate and proper conversation with people about money, how you're going to make more, how you keep more. Last thing we're going to talk about is the most impactful tax strategy moves is number one, you use our teams, our tax strategists, and you activate the entire code. So you have an operating business and you do as many deductions as you can. One additional way to invest other than the assets I mentioned earlier is an IRA. So in the IRA code, you can put, depending on your age, between $70,000 to $90,000 away tax-free. You can also buy a gross weight vehicle of 6,000 pounds or more. You can also gift, for those of you who want to gift to your kids, or you can employ your kids, either way, but you want to activate the greatest amount of deductions. So you don't go on vacations, you go on business trips. They're deductible. So we know the strategy, we live the code, and we'd love to help you actually really get a prescriptive tax plan that's going to affect your money management, your wealth plan. They tie together. The more you keep, the more that stays in your pocket and your wealth building. Again, go to askloral.com if you have any questions, ASKLORAL. We'll be back tomorrow.